And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, automated expert advisors for MetaTrader 4, MetaTrader 5, and all those things. Hopefully make us money while trading Forex. So with that, first I want to say welcome, and also want to remind you that if you like this video, go ahead and hit the thumbs up button. And if you want to see more of these videos, then subscribe to this channel, and YouTube will notify you when I'm putting out more. And lastly, if you want to comment, if you want to talk to me directly, then comment, fill out one of the comments, and I'll get back with you as soon as I can. Let's see. In the meantime, and thank you, Cheryl. Yes, it was a fabulous day yesterday. Nice and warm, and we were able to get outside a little bit. So with that, let's go ahead and go to the. What we're gonna do now? Let's go to the risk disclosure. Since we're talking about putting money at risk, then let's go ahead and do that. Let's see. First, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So this is by all means not a hold it, buy it and hold it type investing activity. This is trading. This is where you're in and out and taking profits and stuff like that. A lot of people do not like traders. That's fine. They don't have to. But this is something that has been an interest of mine for over 30 years, and it's so I'm kind of pursuing it a little bit. So with that, let's go ahead and get into what we're doing today. And look at that. The Great British Pound is the strongest currency in the world right now, the strongest major currency in the world, with the USD way down here below the Japanese yen, and the euro is right here. And on the weaker side, we have the Canadian loonie, the Canadian dollar, and the Kiwi, aka the New Zealand dollar, and the Swiss dollar. So with that, or Swiss franc, let's go ahead and go into some things to talk about. First, on a personal note, let's look at this. I failed another prop firm challenge. So it went over last night. I had $100 worth of room left, and I knew it wasn't going to happen. So I failed the max loss category. Had this going on since February. And so that did not work out. Oh well, we'll have to get another one day and keep going with that. But right now we're not. We're gonna back off from the prop firm trading and work on doing this. Which is my new platform, tradingforexforprofit.com. We're getting closer to launch. Getting some more built-in, some more features built in, as well as the strategy. Our strategy tester is coming up, so we can manually test all your strategies before you go forward with them. I'm not quite sure what that looks like yet, but we'll certainly figure it out as we go. So with that, let's go to the what's happening in the world today. For today, we have our Canadian GDP coming up. That ought to be interesting. Then we have the U.S. JOLTS job openings coming out at 10 o'clock. So we'll see how that turns. And this is an interesting headline right here. Trump tells aides he's willing to end the war without reopening the Strait of Hormuz. I thought that oil was going to go through the roof on that one. It did not. I'm not sure how truthful that is, because it's one of these Trump tells aides, and who's the source? Well, we don't know who the source is, but he's telling aides that. Well, we don't know that for sure, because anything can be manufactured these days. So I don't know. I'm not either. I'm for a war that ends quickly, but it's we'll see about that, because I'm on the same page as Sun Tzu, and the war should be brought to an end quickly without causing more pain to the people by rising prices of everything. It was more in the days of old that happened, but right now it is happening, because it is increasing the price of oil and increasing inflationary pressures in the United States and worldwide. But here we have a neutral setting on the investing world right now, because everyone's kind of sitting back saying, what's going to happen? We don't know. Which is, the answer is true. None of us know. Let's take a look at CNBC real quick. very quickly. Not a big fan of CNBC. And yes, I had filled up the premium gas in my fiance's car yesterday, and it was $5 a gallon. So yeah, true. Where I live, stock market's looking robust today. So it looks like we might get into a risk-on situation like we did yesterday, and then it collapsed. So who knows? Meantime, that's why we're here. It's kind of speculating what's going to happen. I don't know that I would trade too much in the environment we're in right now, but I do have one trade going right now, actively going. It's in the euro. We'll get to that in just a second. And it looks like we're having a glitch at TradingView. Let's get into this real quick. See if we can get that coming back up. It did work a minute ago. Refresh it. Get a new send request in. There we go. A new get request in, as it were. So with that, let's go ahead and start with the DXY. The DXY is pulling off a little bit, pulling back a little bit. Looks like it surged in the overnights to about 1064. Now it's pulling back to 1047. This is looking almost like a turnaround territory. It's about time. It's be about where we want to see a turnaround in the DXY, where one would become more obvious. Bond yields across the world going down. I like that. Though it's usually temporary that they do that. 4.326 is the 10-year bond yield right now. It's 4.43 over the week. Let's take a look at that chart real quick. Yeah, it's all the way up here. It got as high as here before it pulled back. So that's the predominant thing that people look at for currency strength. And it's got a crossing point taking place right now between the 20 and the 50 year. Between the 50 and the 200 to the bullish side. So we'll see how long that lasts. I don't expect that to last much longer, especially if it starts coming down. But at any rate, DXY. Those are just two things I don't invest in, but they do give me an idea of what is happening everywhere else. Whoops, that's gold. There's also, where'd it go? DXY, there it is. So we have the DXY kind of pulling back a little bit. Euro versus the pound right here. Big pullback on the euro versus the pound. So the euro is kind of taking a backseat to the pound right now. And all these things always change too. They're always changing. So there we go. That's what we're looking for. A doji. A doji very low in the range. It could be time for a turnaround for the euro versus the dollar. I would like that. That would make me very happy. And if I had waited on that trade from yesterday, I might still be in the game on that proper challenge I blew. Dollar versus the yen right there, 159.64. Again, should be in prime come down territory. We're looking for dollar weakness if the war ends. We're looking for a complete dollar pullback. In fact, if the dollar ends, or if the war ends. PBB versus the euro versus the USD is started to take off a little bit. Looking at again a little bit of a possible turnaround scenario. However, it's got a lot of resistance right there. Pound versus the yen. Look at all that. Huge amount of resistance right there. So we'll probably going to see that moving lower, possibly. Maybe. Euro versus the yen. Completely sideways. Very tight range right there. 182.84, 183, yeah, 70 pips. 70, 80 pips. Not even 70 pips. 60 pips. So that's a very tight range. You can trade it if you want to, but that's looking a little bit too thin for me. Especially on the daily time range. Maybe if you get down to the hourly, you could trade that. Let's see what that looks like. Yeah, possibly use a mean reversion strategy on the hourly, at least for a little while. And then that's going to break down as soon as something gets away. Which would probably be ending our strikes in Iran, because I don't think they've left to bomb our civilians. I hate to say that, but I think that's the case. I'm sure there are a bunch of people living in caves or something like that, but oh well. 150, 183.907. Dollar versus Canadian. Look at that breakout. It's not really emphatic enough for me to get excited about. I'll be looking for a pullback in this. See if it gets back in this weekly. I think I did set this up on the weekly range. Yeah, it's a broad weekly pitchfork right there. Came off the median, came up to the 100%. Looking for a pullback on that. Not sure if we'll get it. Definitely looking for a pullback on this. It's related to the oil trade. And if we pull back without reopening the Straits of Hormuz, then we are looking at probably $140 oil, is my guess, which means we'll see this kind of perking up a little bit. But we still have big-time economic weakness in Canada. So I'm not sure that that's going to take place. We also have Canadian GDP coming out today, so we'll see how that's affecting everything. Oil, look at that, the NYMEX. NYMEX is a mess. It was trading down here, minding its own business at 67. Actually, minding its own business way down here at 56. And started running mouths around January. And since then, it's been taken off. 102. Again, this is not the first time we've ever seen this. Here it is in 2008, weekly high of 145, and up here, weekly high close in 2022 of 121. So it's not the first time we've seen oil this high. Aussie versus the dollar, right here. Again, coming off a little bit. Should be running into some support. Which might be time to get a turnaround on that one. Gold. Gold's looking perky, isn't it? Got that nice little doji right there, little dragonfly doji, and then we have the a little bit of a pull up right there. Platinum, 1924. Maybe start flirting with 2000 again. Palladium, again, not something I trade, but something that I watch to get a correlation between the metals. And look at silver perking up. Look at that. Nice little indecision doji indecision candle right there, followed by a stronger candle, getting into some resistance here, and on the 73 to 76 area. Oh, to 80 area. Okay, if it breaks through 80, then we'll see that go higher. If it breaks through 80. Software stocks, look at that. They did well yesterday. All of them except NVIDIA, which did not do well, and Upwork. Look at that. Came off, should be flirting $9 soon on that one. HubSpot up. So that would put might be an indication that the economic outlook is going more towards a human type discipline and human type activity and less AI type driven activity. So with that, we'll see what happens with that. But in the meantime, that's all I've got for today for our update in the middle of, or the beginning of the, more like the middle of the London market, beginning of the London market. So this is all I've got. If you guys have a great one, if you like this video, then by all means hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, stay tuned. We've got some automated EAs coming out possibly, so we'll see how that goes. It's a little bit of automated trading action. And oh yeah, also if you want to talk to me directly, then hit me up in the comment section, and I'll get back with you as soon as I can. So you guys have a great one. Now I'll talk to you later. Bye.